Good day, and thank you for joining me. I am Henry Lazenby, a multimedia content creator for the Northern Miner. Joining me today is Stephen Stewart, the CEO of Orefinders Resources and chairman of Mistango River Resources. The companies recently made the headlines after announcing a proposed three-way partnership with Kirkland Lake Gold to unlock value. Thank you, Stephen, and for making the time to talk to me today.
Hey, good morning. My pleasure. Very happy to be here with the Northern Miner again.
All right. So let's start off by looking at the two junior companies you are involved with, Orefinders and Mustango. How do they relate to each other?
So Orefinders, I've been at the helm of Orefinders, well, ever since the beginning of the company. I was involved with this formation. In 2015, I took over as CEO. And we have been having a counter-cyclical approach to acquiring assets in a down market, which it was in 2015, ever since until the beginning of 2020. And so we spent all of our efforts on acquisitions in a down cycle, and oftentimes from distressed situations. That's how we acquired our McGarry project. It was from a company that was looking to exit Ontario and restructuring. And that's also how we earned our interest into Mistango, which is a story that leads back to 2018 and where we acquired a 31% interest in that company from Osisko Gold Royalties. And the company at the time was led by a completely different management team and board of directors, and we saw a value disconnect between what we paid for that 31% and ultimately the assets or asset that it had. And at the time, its flagship asset was the Omega, which is about a 600,000 ounce asset located right next to Orefinders McGarry project, and also located very proximate to the Kerr Addison, which is a 11 million ounce former producer and now a 6 million ounce 1 gram deposit. So the company at the time was traded for less than $1 million. We got our position for about $250,000 and initiated a proxy battle. We went directly to shareholders and we removed management in late 2019. It was a big process to undertake, a big risk, but we overcame the odds. And when we took it over, we focused our attention on a little parcel of asset it had next to the Macassa. And the Macassa, of course, is Kirkland Lake Gold's flagship asset, one of the highest, if not the highest grade gold mines in the world, certainly in Canada. And it's got a huge mine life on it. So that's a very interesting parcel of land, especially when you consider it's directly on strike to the Larder Catalyte fault, or the O4 break. So the gold bearing structure, if you will. And then we focused our attention on expanding that land package, which we did quite successfully. We ended up getting about 5,000 hectares of land adjacent and contiguous, and it's our belief that the mineralization from the Kirkland Lake ore body, which is larger than the Macassa itself, the Macassa is just the 7th mine to extract, but we believe that it went westward, and that's where our land package is. And so that's what a Mistango evolved into. It evolved into owning what we call the Kirkland Lake West. And then, of course, it still has the Omega, which was the original intent. And of course, Orefinders still retains its interest in Mistango. So it is a significant shareholder. It started off with 31. It's a percent, that is, and it's probably about 19% after we've issued new shares to finance ourselves. Mistango now has about $7.5 million in cash in it. But the company has been transformed. It had been literally revived from its deathbed and turned into a very well capitalized company with two very interesting projects in a great jurisdiction, which of course is Kirkland Lake. And that's where Orefinders, not by chance, but by design, that's where we, when I say we, I mean Orefinders has its assets too. So you've got these two companies, very similar in terms of asset profile, same management teams, very similar cash in the bank, and that they both have well over $7 million in cash. And now, of course, they both have this really interesting deal with Kirkland Lake Gold, which will see Kirkland Lake Gold spend $120 million to develop their respective assets within those two companies. So that's sort of the genesis of how Mistango, our interest in Mistango, came to be, and why we've got these two companies, which are neighbors, sister companies, same profiles, and it just sort of gives a little bit of context behind the history.
Yeah, yeah. I understand they're also under the same umbrella parent company.
Well, it's not so much a parent company, but yeah, I guess you could call it a parent company. That's the Ore Group, ORE Group, and that is our group based here out of Toronto. We've got a dozen or so, what we say, like-minded professionals. We're entrepreneurs who invest our time, money, and skill set in either discovering new ore bodies or expanding upon existing resource and deposits so that we can add value for us and our shareholders. And you're right, within the Ore Group, we've got, of course, Orefinders and Mustango are two of the 6 companies. We've got QC Copper, which was a spinoff of Orefinders Resources. That's got a copper asset in the Chibougamau district, which we're developing. We've got Baseload Energy, which is a uranium exploration company in the Athabasca, which is very interesting to us. We're big believers in uranium and, of course, copper too, green metal energies. And then we just launched American Eagle Gold, which was a spinoff of Orefinders again. So Orefinders is quite active in terms of creating opportunities and dividends. And then our newest incarnation will be exposure to the nickel space, which again complements our views on call it the electrification revolution that's coming. It's just going to be monumental in terms of not replacing entirely, but slowly supplanting the oil, the fossil fuels industry. And so D-Block is going to be launching on the TSX Venture. In just a few months, we've announced the transaction. We've got 2 assets that we're quite excited about. So we love gold, and we love metals that reflect the transition away from fossil fuels towards clean, green energy, which is produced with uranium, transported with copper, and then ultimately stored, at least in the automotive industry, through nickel.
Thank you. Okay, so let's dive into the recent deal with Kirkland Lake. What are some of the key details about the deal, and how is it positioned to unlock value of these assets that you've mentioned?
So it's really about diversifying our risk and covering our downside by having access to capital throughout the evolution of discovery. Discovery is a high-risk business, and it takes time. Of course, you can get lucky. Things could change tomorrow. We could discover an ore body with a drill bit, but it doesn't always happen right away. And so to get to secure a $120 million commitment from a major mining company like Kirkland Lake Gold speaks to the quality of our assets. Clearly, our team loves our assets. We wouldn't have acquired anything, any asset, had we not felt that it has the potential, the risk-adjusted potential, because we never know until we drill it. But clearly, not every, plenty of juniors can easily say that. Very few juniors can have the luxury or the advantage of having a major mining company, a very reputable company, saying, you know what, we agree. And so that's part and parcel of not why we did the deal, but I think that does speak to the intangibles of being able to do a deal with Kirkland Lake. However, really, the bottom line is the investment. Okay, so again, they're coming in and spending. Well, first they invested 9.9% in the equity of each of the 2 companies, which is round figures about a $4.5–5 million investment. And then, but really, the big numbers come to about putting steel into the ground, where they're going to be putting the $120 million into the 5 assets collectively, which are housed within Orefinders and Mustango, which are all in the Kirkland Lake camp. So that's what they saw. They saw potential to grow. I think all mining companies are looking towards this next cycle to replenish their ounces. We give them an excellent footprint. I think between Mistango and Orefinders, we are the 2nd largest landholder in the district, and we've got really excellent real estate, particularly on the fault, the major fault system, which has been producing gold for 100 years and will be producing gold for another 100. So I think Kirkland Lake took a long-term view, invested in the team, invested in our assets, and as we speak, we are designing our drill programs, our future drill programs for both Orefinders and Mustango, and we'll be coming out with those specific details in the not too distant future.
All right. So please tell me a little bit more about the geology of the fault itself. We're talking about the Cadillac Larder break, a lake break, right? Why does it continue to be so prospective for gold exploration, given its hundreds of million ounce history?
Well, you know what, the genesis of the gold is something that I wouldn't be able to do it justice. We'll have to come back another time and invite Charles Beaudry or Keith Ben to tell you about how that ore got deposited. What I can tell you is that the fault system, and we'll call it very simplistically, the Cadillac Larder Lake fault, which runs anywhere from, you know, obviously west of Kirkland Lake and arguably goes all the way over to Val d'Or. It has produced gold for, as I said, 100 years, and it's probably going to go for long after I am gone. It is just a very simply, it's a crack in the Earth's fault, and fluids over billions of years ago or hundreds of millions of years ago ultimately deposited this gold, and there's an awful lot of it there. When you find it in traps, okay, so you're always looking for these conduits, and then ultimately it's traps for the gold to fall out of solution into economic quantities. And for whatever reason, the town of Kirkland Lake, as it's now known, was discovered very much because of the gold that was deposited there and found by Harry Oakes. If you go back, was the first individual to find gold in that area and became ultimately the richest individual in the world. But anyways, it is a, you know, there's no doubt about it. There's been plenty of gold taken out. In fact, 25 million ounces of gold have been extracted from that exact ore body. Call it the Kirkland Lake ore body. The Macassa, again, is just the 7th mine to extract from this single ore body. It's phenomenal. And then there is no doubt in my mind that there are other ore bodies, either continuations of the Kirkland Lake ore body itself or new ore bodies that are located on that stretch between Larder Lake and Kirkland Lake. There's no doubt in my mind, we just haven't found it yet. Of course, and then many people don't appreciate that the Kerr Addison mine, which I mentioned, is about 25 kilometers to the east. And so that's sort of the goalposts between two world-class mines in that district. Different styles of geology, but nonetheless, the gold has been deposited there. So between those two goalposts, that's where we focused our land consolidation. That's where we're focusing our exploration efforts. We're not the only groups doing it. Agnico Eagle has a major presence in the area as well, and there are a couple other juniors. So it's a very well endowed system. The trick is finding it in economic quantities. And now that we have this investment from Kirkland Lake Gold, I think our odds of finding that game-changing drill hole have increased. Ultimately, that's what it's about. We have to make risk-adjusted decisions in our business. There are trade-offs. We bring new money in to increase our odds of making more money and finding discoveries.
So ostensibly, the deal is structured around potential future synergies with the existing infrastructure that Kirkland Lake has in the region. Am I correct in that submission?
That's possible. I mean, you never say never. It's certainly if we were to find the extension of the Macassa or the Kirkland Lake ore body, and it's very proximate to their mill, I would certainly be the first to say it doesn't make sense to build, you know, a new processing facility. Obviously, you'd probably have to build a new shaft, etc. But that's not that difficult to do. But certainly, you'd like to take advantage of the infrastructure in place. But that said, if we found a deposit over towards the east where the on our McGarry project or our Omega project, where there's existing resources, maybe that would justify its own mill. Again, it's that you have to put it in the context of how large is the discovery you've made. Can it justify the capex to build its own mill? Does it make sense, or do you ship it 20 kilometers? Does that mill have capacity? So there's lots of variables in play. Obviously, all else equal, you'd love to use existing infrastructure as much as possible. Certainly, roads, crew, power, all those elements are there. Really, the only question mark would be building your own processing facility.
Okay. So just looking at the broader picture, what can be said about the timing of this deal? Does it mean that reserve replacement is starting to move up on the priority list of mid-tiers and junior and majors?
Absolutely. There's just no question about it. For the last 10 years, let's just say, by and large, there's obviously exceptions to the rule. The mining companies have been focusing on delevering and high grading their deposits and not investing in the juniors. We haven't seen this wave of M&A that we've seen in past cycles. It just hasn't happened yet. So I think there's absolutely no question that all the major mining companies are shifting their thoughts towards growth. The trend in the investment community has been to get their houses in order. Okay, so reinvest internally and focus on profitability as to growth. However, and that's true, and they should have done that, and I think by and large they've done it. Okay, so if you look at the balance sheets of the producers, they're in really, really good shape. They've delevered. The free cash flow flowing to the bottom lines of all the good operators are phenomenal. At $1,900 gold, at $1,000 AISC, those margins are phenomenal, and so that cash is going to burn the hole through some of these guys' pockets, I think, and they're going to be forced to think about. Newmont, for example, produces 7 million ounces of gold a year. It is virtually impossible to find 7 million ounces of mineable gold every single year. So how do they replace those reserves? Well, usually M&A, either through big companies like potentially with Barrick, there's lots of speculation around that, or take out the next big discovery that is not in production. And then that's the biggest example, and it all goes all the way down to your sub-million ounce producers. But I believe M&A is inevitable. That's how this industry has survived and thrived over the years. And I think the industry is just ripe for that. And then on top of that, we're just not finding it like we used to, are we? I mean, back in the 80s and the 90s even, we were finding 10 million ounce deposits every year. Now, I mean, there hasn't been a real 10 million ounce deposit probably since Malartic, and that was, getting back 15 years ago. So it's, if we're finding it, it's lower grade, it's in riskier jurisdictions, it's undercover. So to find quality deposits in great jurisdictions that have grade are fewer and fewer and farther between. So once that process gets underway, and then of course, the human psychology of the market's going to come into play, and we're going to get, as they say, FOMO, and that's when the cycle builds up and people start overpaying for assets, and then the whole cycle continues just as it did in the last cycle. But I think we're many years away from that. It hasn't really even begun, but we're seeing the beginning of it, with gold price holding in its $1,900 level, and in all likelihood reaching all-time highs fairly soon.
All right. So have any of the assets currently in play have had prior economical studies completed on them in previous years?
Yes, our Orefinders Murado has a PEA project on it that we did back a number of years ago. It's a small scale mining operation, not something that we're pursuing at this point in time. I believe small scale mining is not the way to go. Really, you want to make it as big as possible and then evaluate the economics. Also, our McGarry, Orefinders McGarry, has a PEA on it as well. Again, evaluating a small scale mining operation. However, that's an exception where actually has amazing infrastructure. It's got a head shaft, a head frame in place, and they were down mining it on a small scale level back in 2013. But that's when the gold price collapsed and there wasn't the capital available, and that's ultimately why we ended up acquiring at such favorable terms, because that didn't work out, and they ultimately went belly up, and we picked up the pieces. So again, I'm not looking to repeat the sins of the past. We're looking at it in the context of let's find something new, something bigger. So yeah, we're at this stage, we're more focused on discovery of something brand new along the fault, or the expansion of existing resources. We're not looking at a production scenario in the near term.
All right. And then when can we expect any of these concrete exploration plans to be made public?
Very soon. So we are, in fact, just this Monday morning, we had our team meeting and we're discussing our plans. I would expect in the coming weeks, we'll have more definition around what exactly we're going to do. I suspect for Orefinders, our shareholders there can expect us to focus some attention on our McGarry project. I've been talking a lot about that. We just completed a very significant geophysics program aimed at delineating new targets. Again, we're not going at the resource as it's understood. We're going over here, so to speak. We did IP-induced polarization and MT, which is designed at seeing at depth. We had some very interesting anomalies, and they're ripe for drill testing. So that's where I think shareholders can expect us to focus on there. And then on Mistango, we're going to go back and we're going to, while we do have the Omega, it's very interesting to us. We think it absolutely has the potential to go to 1 million ounces and more, and it's near surface mineralization. But I think our shareholders, and certainly me, I think the best game-changing risk-adjusted return, so where we want to put our money is going to be in our Kirkland West project, which is, again, right beside the world's highest grade gold mine, which is the Macassa. So we'll have more details on that coming out in the not too distant future. So those are the two projects within the companies where I think we'll be focusing on next is the Kirkland West for Mistango and the McGarry project for Orefinders.
All right. So what did we miss? Is there anything else that we should touch on that I've not specifically asked you about?
No, I think, like, look, lots of information. I think, again, our objective here is to put money back into the ground, do so in partnership with the Kirkland Lake Gold. And we're seeking their advice and they're following ours. We're working so far very well together, and we're excited to announce these drill programs because that's how we're going to make our investors the types of return they expect from junior mining companies.
All right. That was Stephen Stewart, the CEO of Orefinders Resources and chairman of Mistango River Resources. Thank you very much for your time.
Pleasure. Thank you very much for having me.
Okay, that concludes it. So thank you very much for your time. I think that went pretty well. Sorry, I just midway through I discovered there was a dog in my office. I'm just trying to kind of.
Oh, good. Where did he come from?
All right. So thank you very much. That was really interesting, and I'm sure we're going to follow this story very closely, and I'm sure it's going to deliver lots of news flow going forward. Thank you very much.
Pleasure. So just so you just joined Northern Miner. We haven't met yet, but so you're new to the company.
Yeah. So just a little bit of background for me. I've been covering the mining industry for the past 10 years. I'm a South African, and one of my previous employers was Creamer Media's Mining Weekly. I'm sure you must have heard of them.
I have.
Yeah, they seconded me in 2012 to run the North American news desk for them to Toronto. And so that's really where I come from. And so I've been doing that for the past 10 years. And about 5 years into it, as a South African, I've never been in ice and snow before. So I literally just packed up the car and I drove west to Vancouver area and came to settle here. And so about 3 years ago, I joined the team at Mining Journal, which is headquartered in London, UK, and really managed from Australia, Perth office. And doing the same for them. And then, yeah, last month I jumped ship and came over to the Northern Miner and mining.com. So,
well, good stuff. Well, welcome. I've worked with the Northern Miner for a long time, and they've been big supporters of us through various means. And so, yeah, big fan of Trish and Joe and Anthony. So anyways, welcome to the team, and I'm sure we'll see you around again soon.
Well, do make sure to remember us when you do site visits again. We'd love to come and see the assets for ourselves and obviously generate more coverage that way. So,
okay, we'll do.
Again. Thanks,
okay.
Stephen.
Have a nice morning. Take care.
Bye.